Yeah, let me start about what is Bitcoin. Bitcoin is really the first cryptocurrency out there. It's a digital currency that was created back in 2009 by someone called Satoshi Nakamoto, a person who nobody knows who he really is. I think it's more than one person. Actually, it's a group of people who created this. But that's not that important. Actually, it's really the importance is what he created. He created a digital currency called Bitcoin that lives on a blockchain. I'll get back to blockchain later. It's basically a way to start using currencies on the internet to pay people directly without intermediaries, without banks, to be your own bank, basically. It's the first time ever that anybody could create their own currencies and could transact with other people without intermediaries like banks or PayPal.
And to me, what is Bitcoin? Bitcoin is the first use case of the underlying technology, which is called the blockchain. And the blockchain is a distributed ledger technology that has enabled the internet to evolve to the second phase of its growth. So the internet as we know it today, Google, Facebook, Amazon, the internet that's ubiquitous, that we all use it on our phones. There was one major problem with that internet. It was called the double spend problem. So the internet as we know it today was very good for disseminating information quickly, democratizing access to information globally. You get on the internet, you can theoretically access information anywhere. When people say, oh, it's on the internet, now it's spread like wildfire, they're right, because the actual protocol layer of the internet as we know it today, the protocol actually copies data back and forth between servers, which is why there's a proliferation of data. So that internet was good to grow the network, to grow access to information. However, there was a shortcoming. It was not good for exchanging value. So what did you have? You had intermediaries popping up that sat on top of the internet itself. So there are applications that were built to interact at different points with the internet. I'm talking about Google, Facebook, Amazon. So these are intermediaries. And what happens when I want to send $1 over the internet to Mark, I have to send it to PayPal, and then PayPal sends that dollar to Mark. So there's an intermediary. What the blockchain has been able to do is it's made the internet evolve so that you can actually transfer value over the protocol layer of the internet itself. So that's a very subtle yet extremely profound difference between the internet as we know it today. So now I can send one thing to Mark, and it will remain one thing once it reaches the other side by using the actual protocol layer of the internet. And it's done by utilizing the blockchain, which is a distributed ledger. So to me, Bitcoin was the first use case of the blockchain, which was invented back in 2009, which solved the double spend problem, which allowed the internet to evolve from the internet of information, where it spreads information like wildfire by copying it, to now the internet of value, where you can use the same infrastructure that exists with the internet today and copy one thing, and it remain one thing once you send it to someone else. Huge, basically a huge profound shift in the way business and the economy will run.
Yeah, so the blockchain not only disrupted the way we do business on the internet by solving the double spend problem, but also it's very important that it's very decentralized. There's no central person in the blockchain. So there's no central bank like for currencies. If you want to build a Facebook on the blockchain, you don't need a central entity like Facebook with Mark Zuckerberg to run it for you. It's really the people who use it. Those are the owners of the business. That's a big difference with any other business that we have known so far, and that will change a lot of businesses over the next couple of years. We don't really know yet how it will change because we cannot really predict this. But for sure, there are going to be companies out there, so-called decentralized autonomous organizations, companies without management teams, with companies that basically are run on smart contracts, and these things are all run on the blockchain, and that's really done because it's decentralized. Next to that, the blockchain is immutable. That means anything you ever put on a blockchain, you cannot take off anymore. So it's recorded on the blockchain, and it's on there forever. Everybody can check it later, and it's timestamped, so anybody will know when it was put on there. If you, for example, create something new, you put it on the blockchain, you can prove that you were the one who created it, and you were the first to have access to this product because you put it on the blockchain. Nobody else did it before you, so you're the owner. That's basically a function that's the blockchain has, and that will replace, for example, notaries in the future, because you can use the the notarization function of the blockchain to prove you own something at a certain time, or to prove you had a certain idea before other people had the idea.
So one association that I think is really important to make is that the blockchain and cryptocurrency are connected. Blockchain is the engine and cryptocurrency is the fuel to drive that. So blockchain is code that sits on top of the internet that allows value to be transferred through the internet. So whether that's an application in government, in media, in logistics, in healthcare, the blockchain will touch every single aspect of the economy, because you no longer need central records of information that could be hacked and attacked. So giving you an example of Facebook and Google, those are intermediaries currently, because the way that Facebook works is that it sits on top of the protocol layer of the internet. It gathers all of the experiences and photos of my friends and my family. They package it up, they gate it, and then they resell that information and that data as marketing dollars for profit. Google, the same thing. They sit on top of the protocol layer of the internet. They hoard all of the searches that everyone is doing all around the world. They package up that information and resell it for marketing dollars. These are rudimentary marketing business models that are ripe for disruption, because now the blockchain allows you as the user to control your data. So it's a fundamental shift in not only the power structure, but in the economics.
Yeah, and it's not just for companies, it's also for governments. To give an example, the blockchain is being used at this point in the Republic of Georgia to record land titles on the blockchain. So instead that you have a piece of paper showing that you own a piece of land, you now put this paper on the blockchain, and anybody can check who owns this piece of land, and anybody can see, when you became the owner of the piece of land. And if you want to sell this, you can do it through the blockchain. You don't need to go through a notary anymore. You don't need to go to government offices. You literally transfer a digital token to another person, and the token represents your land title. And this will fundamentally change the way governments will function, because it basically stops corruption. There's no way for a government anymore to try to take your land away, for example, because it's recorded on the blockchain. If they would take it away, they could still take your token away. It would be recorded on the blockchain, and people could see that it happens, and that will stop them from doing it. And this is one example. You could theoretically put anything on the blockchain, any asset you could put on the blockchain, not just land titles, but for example, cars. If you want to sell your car to someone else, you can do it through the blockchain. Real estate. If you want to sell your house to someone else, you don't need lawyers and notaries anymore. You literally transfer the token to the other person, and the other person, by having the token in his or her wallet, can show that he or she is the owner of the house. And that's a major shift that hasn't really happened much yet. I mean, there are some houses that were transferred on the blockchain so far, but it's going to happen over the next 3-4 years. It's going to happen fairly quickly, I think, because it's something that makes markets more efficient, and it makes it more cheap to transact.
So an important distinction about blockchains and Bitcoin and cryptocurrencies. So we can create a blockchain right now. Mark and I can create a new blockchain right now. However, the value of the Bitcoin blockchain is that it has something called network effects. So the value in Bitcoin is directly tied to the value of the Bitcoin blockchain, which is the oldest, most established, and most secure blockchain. So anytime anyone wants to put any asset, a house or art or anything on the blockchain, they're going to put it on the Bitcoin blockchain because it utilizes the most hash power, or the most amount of mining computers or servers around the world are supporting that blockchain, so it's the most secure. Now, you can create a new blockchain, but no one would use it, and it would be susceptible to hack. This is why we believe that Bitcoin will increase in value, because anything that's going to be put on a blockchain of value will be anchored on the Bitcoin blockchain. And you need Bitcoin to transfer value over the Bitcoin blockchain. It's an important understanding. It's important to understand that fact, that the Bitcoin blockchain is the most established, and that's why it's increasing in value. And that's why we see the value of Bitcoin going to $10,000 to $500,000 per coin, simply because the computing power required to secure the ledger of the Bitcoin blockchain is only going to get more and more, which means it's going to be more and more secure.
Yeah, so it's important to understand that there are a lot of different blockchains. Indeed, the Bitcoin blockchain is the most important one, the most valuable one in my opinion, the one that will stay the most valuable. really the granddaddy of blockchains. But there are many other ones out there, and these other blockchains, the currencies run on top of them. The tokens are called altcoins. The most well-known one, the number 2, which I call the digital silver, is Ethereum. Ethereum was created back in 2014 by Vitalik Buterin, and it's more of a smart contract language. It's basically a blockchain on which you can run contracts. It's a blockchain that will eventually replace lawyers, I think, because contracts, in order to enforce them, you don't need people anymore. You need programmers to program them on the blockchain, and once they're programmed, they will self-execute. There are many other currencies out there. For example, something called Zcash, which is which is similar to Bitcoin, but it's completely anonymous. That means if you transact in Zcash, nobody can track your what you did with your money, what you did with your coins. Whereas in Bitcoin, for example, although people think it's anonymous, it's actually not anonymous at all. Any transaction you do on the Bitcoin blockchain can be tracked. So anytime I buy a coffee with my Bitcoin, in the future people can see this on the blockchain. They can see that from my wallet, my account basically. Someone bought a $2 coffee or $5 coffee at Starbucks. So Bitcoin is not anonymous, and that's why this currency called Zcash was developed. There are many other ones. In total, there are over 1,000 different altcoins that have grown big over the years. Some have grown big, some not grown so big. But there are many out there, and there are new ones coming out literally every single day. And they all are a little bit different from Bitcoin or from Ethereum. They all have separate characteristics. They're good at one thing, or not so good at other things. And so for what you want to do with cryptocurrencies, with blockchains, you need to find the right currency to use it for. But for me, for most things I want to do with Bitcoin, for example, big transactions, large payments, or things that need security, like land titles, I would always use the Bitcoin blockchain. That's the most secure one out there. It's not the fastest one, but in the end, it's the one that will be there forever, I think.
And so it's important to note that the blockchain ecosystem and the cryptocurrency ecosystem, again, there's an association. I want to create that association. You need blockchain and you need cryptocurrency to run blockchains. That entire ecosystem is referred to as the digital currency asset class. Currently, the digital currency asset class, which represents all blockchains and cryptocurrencies, including Bitcoin, Ethereum, and all other altcoins, the market cap is about $170 billion. Remember, we don't actually believe that Bitcoin will be the one and only. Contrary to that, there is going to be an entire suite of cryptocurrencies and blockchains that will serve different use cases and solve different business problems. So that's why this asset class is set to go to 500 billion, to a trillion, to multiples of trillions, because at the end of the day, it's code. Blockchain is code, leveraging the infrastructure of the internet and having cryptocurrency being basically the fuel that drives all the code. And the code is developers thinking about use cases, solving business problems. It's like 1992 right now in San Francisco, where there's the internet, but there was no web browser yet. So there's this technology that we know is going to change the world. They just don't know how to monetize it. And entrepreneurs are sprinting around right now trying to basically build use cases to capture value. So this is another start of an asset class that's going to be in the trillions of dollars, and we're lucky to be a part of it.
Yeah, so like Sean says, Bitcoin is really the fuel of the Bitcoin blockchain, and that's why Bitcoin and blockchain go together. They go one, and they're interlinked. You cannot have a good blockchain without Bitcoin. So the more the blockchain gets used, the more valuable the Bitcoin will become. I think many people in media, in the mass media at least, are talking about blockchain. They're bullish about blockchain, but they're not so bullish about Bitcoin. They say they don't believe in Bitcoin. The problem, however, is that if you talk about the Bitcoin blockchain, it only can survive and can thrive and grow with Bitcoin itself. So if you're bullish on Bitcoin, you have to be bullish if you're bullish on the blockchain, you have to be bullish on Bitcoin as well. And because of the blockchain becoming more popular and being more used, the Bitcoin price will go up. So that's an important point to keep in mind. These things are inseparable. And so if you hear guys like Jamie Dimon say, I like the blockchain, but I don't like Bitcoin, they just have no idea what they're talking about. It shows they hear things, they read things, but they're not really experts in what they're talking about. And that happens to a lot of people in banking at this point. They have these statements about being bullish about blockchain, but they don't really get it. They may understand that blockchain is disrupting their business, that because of blockchain, their banks will disappear over the next couple of years, or at least, the business of their banks will change a lot. A lot of people lose their jobs. But they don't really understand the fact that they need Bitcoin to run the blockchain. So being negative about Bitcoin actually doesn't really make sense if you're bullish about the blockchain. That's an important thing to keep in mind.
And on Jamie Dimon, he said it 3 times before. I said it when the price was at $100, was at $400, then $1,000. Now he actually came out with a statement just like last week saying he will never talk about Bitcoin again.
And then the next day he did it again. He talked again about Bitcoin. So apparently it's something that's on his mind. He's worried about it.
Yeah.
But he's like you said, he said Bitcoin is a fraud and goes to zero. He said it when Bitcoin was at $140. Well, Bitcoin went up. He said it again when Bitcoin was at $400. Bitcoin went up. Then he said again at $4,000 that Bitcoin, was going to go to zero and was a fraud, whatever. Well, right now, as the moment we're talking, Bitcoin is at $5,600. So Bitcoin's resilient.
Yeah.
He cannot talk it down.
And so there's a few different use cases that we believe Bitcoin is actually valuable. And as an investor, why would you invest in Bitcoin? Well, we have four reasons that you should consider why an investment in Bitcoin right now is a good one. First, Bitcoin is a store of value. So there was a survey done to millennials. Say, do you have $1,000? Would you invest it in gold or would you invest it in Bitcoin? They all said Bitcoin. Kind of irrelevant because none of the millennials have any money right now, but think about the wealth transfer that's going to occur over the next 5 to 10 years, 15 years as they enter the market and they accumulate wealth. If Bitcoin were to take only 10% of the entire gold market, gold is an $8 trillion market, so 10% of that would be an $800 billion market. Currently, Bitcoin is about a $70 to $80 billion market. That's already a 10x right now, which would push up the price of Bitcoin from $5,600 to about a $50,000 or $60,000 price per Bitcoin. That's only if you believe that gold will be replaced by Bitcoin, and only 10% of gold. That's a very conservative amount. So Bitcoin as a store of value. That's one reason to believe. A second reason to invest in Bitcoin right now is cryptocurrency, and Bitcoin especially, can be used as a financial rail. Essentially an easy way to transfer value, to transfer money globally. Currently, if you want to wire transfer money to Europe, to Asia, you have to use the SWIFT code network. You have to send it through intermediary banks. It takes 5 to 7 business days. It's expensive. So with Bitcoin, you can actually peer-to-peer transfer $1 or $1 billion from one party to the other direct, instantaneously with nominal transaction fees. So Bitcoin being used as a financial rail will totally disrupt the existing infrastructure of the financial system, or that aspect of the financial system. Again, another reason to invest in Bitcoin. Following that, the remittance market. It's a $500 billion market. The remittance market is basically diasporas of migrant workers working abroad, sending hard-earned money back home to their loved ones. Well, Western Union takes 6 to 8% of each one of those transactions. So now they can use cryptocurrency or Bitcoin to send their hard-earned money directly back to their loved ones overseas and save that money. So a $500 billion remittance market is set for disruption. It's one of the first most obvious cases. Do you want to talk about the third and the fourth?
Yeah, so to me, a very important one is actually Bitcoin becoming a currency eventually. So Bitcoin being used for monetary transactions. Like you use a US dollar or a Canadian dollar right now, in the future you might be using cryptocurrencies for this. And I think actually Bitcoin is a very good contender for being a currency eventually. For a long time I didn't really see it happening because the Bitcoin blockchain can only do about 7 transactions per second, which is not a lot. If you look at MasterCard, Visa card, they can do up to 40,000 transactions per second. However, something called the Lightning Network will launch over the next couple of months. The Lightning Network is basically a side chain built on top of the Bitcoin blockchain that allows you to do transactions very fast, lightning fast, and it can do probably about 100,000 transactions per second. So it's going to be much faster even than the current credit card networks. And the good thing about it is that it allows people in developing countries that do not have access to banks, that do not have access to credit cards, to become part of the financial system. For the first time ever, people in Africa with access to the internet can actually start buying things on Amazon. They cannot do it right now because they don't have a credit card, they don't have a bank account. Bitcoin will allow them to do these things. So I think in the future, a lot of commerce on the internet will be done through Bitcoin. And really that's because of the Lightning Network, and that's because the browsers online will start adding Bitcoin and cryptocurrencies to their standard browsers, which is a major thing. And so what this means for the Bitcoin price is really, if 10% of all the transactions in the world will be done in Bitcoin, the price will go to about $500,000-$600,000. So basically it means it goes up 100 times based on the current price. Just 10% of all the transactions in the world. It could be a lot more actually, if this is something that's going to be used as the currency, the online currency. It could go to 50% of all transactions. If that happens, the sky is literally the limit. And for that reason, I think at this point, Bitcoin is the best potential investment you can ever do.
Yeah, and on creating accessibility for the unbanked. So about 6 billion people in the world actually don't participate in the global economy because they don't have bank accounts. Bitcoin can change all that because the same way that mobile phone technology allowed the rest of the world to leapfrog needing landlines and giving them access to the internet and access to telecommunications, Bitcoin will do the same thing for the financial world. It will leapfrog banks, and now the 6 billion people in the world that are unbanked will be able to hold a balance in their account, pay for things online, control their own money in a centralized place. That is what Bitcoin is actually allowing people to do, and the blockchain. So that's the true disruption here. And think about when the 6 billion unbanked people actually participate in the global economy, the price of Bitcoin is set to explode.
Yeah, and if you look at the history of Bitcoin, price has been exploding for years. I mean, basically from the moment Bitcoin started, it was worth a few cents when it started, and it went up to $1 back in 2010, early 2011. It broke $10 in early 2012, $100 in early 2013, $1,000 in late 2013. Then we had a period where it was more or less stable. And actually this year we really saw another huge explosion in prices for Bitcoin. Early this year, Bitcoin was about $1,000. Right now it's almost $6,000. So it's an asset class that goes up very, very much, has been going up very, very much over the years, and that will keep on going up based on what we just talked about. And it's very volatile, much more volatile than stocks are. So, if you're worried about losing money and you cannot stomach a 10-20% loss sometimes, it may not be the right thing for you. However, if you're willing to hold on to Bitcoin for more than a few months, so far you have always made money. It's a long-term investment. It's a long-term investment that's, I think can generate outsized returns, will beat every other asset class in the world. It's, my thinking is, I've been in Bitcoin since it was $100, so I've seen it go up 50 times over the past 4 years. I think it's going to go up another probably 50 times over the next 4 years, and even a lot more over the years after that. It's really, if you're willing to take a bigger risk and put some money in, it can make you literally very, very rich.
So what's important to note about Bitcoin is there's a limited supply. So, limited supply with capital in, it leads to an increase in demand and an increase in price. So at the end of the day, the source code of Bitcoin, or the Bitcoin blockchain, was architected so that there would be only 21 million Bitcoin ever in circulation. And Bitcoins are created through the process of mining, where servers globally are rewarded for securing transactions on the Bitcoin blockchain every 10 minutes. And they're rewarded fractions of Bitcoin. And so that's how new Bitcoins are minted. Currently, there are 16.5 million Bitcoin in circulation. And in the year 2140, the 21 millionth Bitcoin, somewhere in and around there, will be mined. So if every millionaire in the world wanted to own one Bitcoin, it's actually not possible right now. So that's another reason why the price will continue to increase, right? So at the end of the day, Bitcoin is is deflationary. So what that means is, as the economy or businesses are built on the Bitcoin blockchain or on the blockchain, as that economy increases on the blockchain, there is less and less supply of Bitcoin available to be able to transact on that blockchain, which will drive the price of Bitcoin up. No problem, because Bitcoin can be divided into millionths to 8 decimal places. So we won't be talking in one Bitcoin in the future. We'll be talking about bytes and Satoshis. But at the end of the day, that deflationary aspect is totally different from what exists today, where you have the US Federal Reserve. So the economy built on the US dollar, as it grows, more and more money is printed. So that's inflation. So as the economy grows on the US dollar, more and more dollars are printed. And then you have natural corrections, as we've seen in 2008, and more to come, because it's architected into the actual infrastructure of the financial system. With Bitcoin, it's deflationary. So there's a limited supply. So as the economy grows on the Bitcoin blockchain, less and less Bitcoin are available, which will drive the price up. So that's a different economic mechanism that's actually going to change the world. It's very exciting.
Yeah, and it shows that, the explosion in prices may seem crazy to people who just look at stocks and bonds. But to be very honest, this is not a bubble. This is really based on supply and demand. Because Bitcoin, like Shonda said, has a limit of 21 million Bitcoins, and there are more people wanting to buy Bitcoin than people are willing to sell it, prices will go up and will keep on going up faster and faster. There's something called Wu's law. Wu is actually a researcher who was doing research on Bitcoin and users of Bitcoin, and he found that roughly every 12 months the number of people that uses Bitcoin doubles. And that's an important thing to keep in mind, because if the supply of Bitcoin is limited at 21 million Bitcoins, and every year the number of people buying Bitcoins and using Bitcoin doubles, it means prices will keep on going up. I think based on this, prices will go up on average 3-4 times per year. So we're at $5,000, $6,000 right now. I think a year from now we're going to be at $15,000 to $20,000. A year from that, it's going to be $45,000 to $60,000 or $80,000. So in 3 years from now, I think it's very, very normal. It's not unusual, at least, if Bitcoin would break $100,000. Right now, people will say it's crazy, that will never happen. Well, people said the same when I bought Bitcoin below $100 and it broke to 100, and people said, $100, that's such a bubble. You should never buy, sell your Bitcoins. And some people sold. Well, it's up 50 times since then. If it goes up another 50 times from now, it's possible, and it might happen. It's not a bubble. There are, it's supply and demand. More people are buying it than people are selling it. And there's just not enough supply in the market. And that's really just based on the fact that people want to buy and hold it as an investment. And that's the strength of Bitcoin. It's something that's here to stay, and it's really the digital gold. It's very limited, and there are more people who want to hold it than the coins that are available.
And someone asked me the other day, well, what's the value of a Bitcoin, right? Same thing. What's the value of a US dollar? What's the value of a bar of gold? There's an intrinsic value, there's an implied value that we all agree on. But I would argue that I think what the value of a Bitcoin is actually represented by the computing power used to secure the Bitcoin blockchain. And there's a commensurate rise with the amount of electricity required to secure the ledger with the price of Bitcoin. As the ledger gets larger and more Bitcoins get traded and more transaction grows with network effects, you require more energy to secure the ledger, and the price of Bitcoin rises commensurate with that. And it's actually, there's a graph out there that actually shows these two things going up at the same time. So as more and more transactions occur on the Bitcoin blockchain, as more and more Bitcoin gets bought and traded and more transactions occur, more energy will be required to secure the ledger. And then the price required to secure that ledger always rises with as much energy as needed. So, we're going to see the value of Bitcoin in the hash power or the computing power used to secure the ledger itself. So what's the value of one Bitcoin? Well, the computing power used to secure the ledger that basically that timestamps all the transactions and makes the blockchain work. That's the value. It's a real tangible value. That's the difference. It's not a belief in a US dollar. It's not a belief that gold bar, is going to do something for me one day because we're holding it. There's a real mathematical kind of argument behind it, and that's why it's so compelling.
Yeah, and that's what makes Bitcoin safe as well. That's what makes Bitcoin transactions safe. The blockchain is really depending on all these mathematical algorithms behind it and the many servers actually defending it. That doesn't mean that you cannot lose your Bitcoin, because Bitcoin as an investment may be safe, but in the end, you are the one who keeps your own Bitcoin. Right now, you may put your US dollars into a bank account and the bank keeps it safe for you. If you own Bitcoin, you have to find your own way of storing it. And that's actually kind of hard for most people. It's hard for people to buy Bitcoin at an exchange, but it's often even harder to keep it safe. If you buy Bitcoin and store it on your laptop, okay, that's fine, until a hacker actually goes into, hacks into your laptop and just takes your Bitcoins away. He or she can literally do that, without any problem. If it's on your stored on your laptop, and you don't secure it well, it can be stolen and it's gone forever. Sorry. So it's not a easy way. There's no easy way to store Bitcoin for most people, and that's really to come back to our fund, the Bitcoin investment trust that we launched. That's one reason why we launched our fund. It's really to give people an easy way of buying Bitcoin by buying units in a trust, like you buy stocks on the stock exchange, and keeping it safe for you in a portfolio without you having to do it yourself. So we keep it safe for you.
So someone said, well, why can't I just buy Bitcoin? Why do I have to buy units of your fund? And the answer is, well, you don't. Go ahead and buy Bitcoin yourself. No problem. But what you have to do first is you have to find an exchange, an unregulated exchange that's in some other jurisdiction in the world. You have to get KYC and AML to open an account at that exchange, which means you have to email secure private information like your passport, your bank statements to open up an account. That could take 3 to 6 weeks. Then if you do actually open up an account, you need to populate your trading account with fiat currency. Well, they're going to take a 4 to a 6% commission on the money coming in. Then you actually have to wire that money to some other jurisdiction around the world that will accept crypto money, like Poland or Malaysia. So very risky. And you can't do large amounts. So even if you do get $10,000 into an exchange by wiring it to some jurisdiction like Poland, there you go. You have $10,000. You execute the trade. You own Bitcoin. Well, the way that Bitcoin works is that there's a public key and a private key. The public key anyone can see, and that's like a PO box. Anyone can send anything to that PO box. But the private key is really the value, because the private key is like the key to the PO box to unlock what's in the PO box. Your private key is now on an exchange that's unregulated, that's susceptible to hack, and that has been hacked in the future and in the past. So what you need to do is take that private key off of the exchange and put it into your wallet. So download a wallet, and essentially then it's on your phone, and then you have to keep that safe on your phone. This whole process is convoluted. It's difficult. The average investor doesn't want to do this, doesn't want to figure it out. What we've created in our fund is a simple solution where, like any other fixed income product or equity within your portfolio, you can purchase it, reporting and monitoring. You can see it show up on your statement as your cryptocurrency asset holdings. And we've just taken out the hassle. Not only that, on exchanges, you can't buy more than $10,000 to $25,000 at a time. So you're limited. If you're an allocator and you have $1 billion in your fund and you want to allocate, $10 to $50 million and take a position in Bitcoin, you can't actually do it on an exchange. You have to go over the counter. So our fund, we're able to process $50 million a day in subscriptions and purchasing $50 million a day worth of Bitcoin without moving the market.
Yeah, and so what's important is we are really the only fund in the world doing this at the moment. We're the only open-ended fund in the world where you can buy Bitcoin and have direct access to Bitcoin. There is something in the US called the GBTC, the Grayscale Bitcoin Investment Trust, which is a closed-end fund. Basically, it's a listed entity that already bought its Bitcoins, and people buying shares in this GBTC entity, they basically, they buy Bitcoin at a premium. So at this point, the premium is somewhere between 40 and 70% of the Bitcoin price, meaning that if you spend $1,000 to buy Bitcoin, you actually only get about $600 worth of Bitcoin. And the premium is there because people really want to buy Bitcoin. They want to have exposure to Bitcoin, and there's just no other product. And I think what we're doing here with the Bitcoin, the FEC Bitcoin Trust, is really, giving people access to Bitcoin at the real net asset value, the real value of Bitcoin. So you buy $1,000 worth of Bitcoin, and you get $1,000 worth of Bitcoin, not $600. That's a fundamental change. It allows people to really invest without losing a premium. And the GBTC showed us that there's a huge demand for Bitcoin. Otherwise, people wouldn't pay Bitcoin at a 40 to 70% premium. And we're now giving people the chance to do this. At this point, it's only for accredited investors. So that means only qualified investors can buy it. But eventually, we plan to list it on an exchange, and then anybody can buy it. Any retail investor can buy it. And I think what will happen at that point is that the GBTC actually will lose most of its premium.
Yeah, so we are FirstBlock Capital, and FirstBlock Capital is an investment management firm that is geared towards creating a fleet of investable products in the cryptocurrency and blockchain space. The vision of FirstBlock Capital was created by Mark Vandergijs, where he was always experiencing people coming up to him saying, hey, can you help me open up a wallet and buy some Bitcoin? So he was doing that, but it became too much. So he thought of a solution, create an asset management company that can create a fund that will give access to Bitcoin to the average investor. So we've been able to do that, and we've created FirstBlock Capital in the beginning of 2017. And we are very proud of the fact that FirstBlock Capital became the first registered crypto investment firm with an exempt market dealer and investment fund manager license. This was a landmark decision that was given by the Canadian Securities Administrators, the first of its kind. So we are the only regulated crypto fund in Canada, and we're very proud of that fact. And it was a lot of hard work, but at the end of the day, we're using that to our advantage, and now we have the FBC Bitcoin Trust, which is our first product.
Yeah, it's our first product, and we'll have a lot more products actually coming out over the next couple of months. Of course, Bitcoin was the low-hanging fruit for us. If people want to go into cryptocurrencies, the first currency they think of is Bitcoin. Most people that know anything about crypto only know about Bitcoin. But of course, there are many other currencies out there. The number 2, Ethereum, is more of a smart contract language. It's the digital silver to Bitcoin being a digital gold. And eventually we'll launch a Ethereum trust as well. So basically a way for people to get access and exposure to Ethereum without buying Ethereum themselves, again through units in a trust. We're looking at a tracker fund that tracks the top 5 or top 10 different altcoins out there, so the most important ones. We're even looking at so-called ICOs, initial coin offerings, which is a way to take a company public on a blockchain. And we want to buy into these ICOs before they get started in the so-called pre-sales. And normally what you see is that when you get into a pre-sale, you can make a very nice return the moment the company goes public on the blockchain itself. So there's a lot of products out there that we want to develop. But the Bitcoin one was really the low-hanging fruit for us, the one that's the easiest one to set up probably, because Bitcoin is the most accepted one out there, the one with the most demand at this point. And also, we chose Bitcoin because our custodian, Zappo, ex-APO, he spelled this one, offered a way to keep Bitcoin safe for us, which was very important because they do not offer this for other currencies yet.
And so a big reason why we were granted our registrations, our EMD and our IFM registrations in Canada, was because of our relationship and partnership with Zappo, who is known as the Fort Knox of Bitcoin. They are a Swiss company and a company out of Silicon Valley, where Mark was fortunate enough to meet the CEO and the founder, Wences Cesares. Mark met him on Necker Island, Richard Branson's island, back in 2013 when Richard brought all the thought leaders of the blockchain and cryptocurrency space onto his island, and Mark forged a relationship with Wences. And that relationship really allowed us to differentiate ourselves from the other Bay Street firms trying to get a crypto license and launching a Bitcoin fund. And why that is because we were able to partner with Zappo. And so Ted Rogers, the president of Zappo, spent hours and hours in due diligence with the commissions, educating about what Zappo is, who they are. They opened up all of their SOC reports, their audit reports, their FINMA regulation, which is a Swiss regulatory body which governs all the Swiss financial institutions. We were on hours and hours of phone calls with the commission. So Zappo is not doing this for everybody. They did it for us because of the relationship that Mark had with the CEO, Wences, and we're very lucky. And so we continue to have a relationship with them. And the way that Zappo keeps the Bitcoin safe is actually quite unique.
Yeah, so Zappo uses a way to keep their Bitcoins offline in a so-called cold storage. And that means they put them on a server that has never been touched by the internet, never been connected to the internet. And that's not all, but they put that server, they put it in a vault in Switzerland, under a mountain in Switzerland, in a cave, basically in a bunker built for the Swiss military. The Air Force had a control in there for many years, until about 30 years ago. And this vault is very difficult to access. It's about 100 kilometers from Zurich. So like I said, below a mountain. To get in there, it's very difficult just to get there. And then to get in there, there are man traps that you cannot go through. There are huge vault doors. The moment you would enter the bunker, people would figure this out. They would take down the electricity, and you wouldn't be able to access that server anymore. But even if you managed to do this, which is against all odds basically, and you would get to this server, you wouldn't be able to take any of the private keys off the server, because the server itself is in a Faraday cage. So it's basically you cannot touch the server with electromagnetic waves. But to get data off the server, you need two passcodes that are generated at the same time in different locations in the world, in locations that have not been announced, so we don't know where exactly these locations are. So you need people there who generate these passcodes for you, and they're only valid for a few minutes. If you don't have these, there's no way you can even get access to that server. So it's basically mission impossible. It's something designed to be impossible to get data off. And that's really what makes Bitcoin so valuable. The Bitcoin held with Zappo, because they're completely secure. At this point, I think about 15% of all the Bitcoin in the world are held on this server. So we're not the only ones putting our Bitcoin on there. It's the best way to keep your Bitcoin secure, and that's really what's made the Securities Commission in Canada comfortable with what we're doing, and that's part of why we got our license.
Mark, how did you get into Bitcoin?
Oh, how I got to Bitcoin? That's something that happened in early 2013. I moved to Vancouver in early 2013, and I was looking at what I'm going to do next. I sort of retired for a little bit, and at that point I had a company based in Cyprus, and this company had a bank account in Cyprus, and then the Cyprus banking crisis happened. And what it meant is that basically my bank account got frozen. I couldn't access my bank account anymore. So what happened is that I wanted to get money off the bank account and transfer it out. I couldn't do it anymore. And I called up the bank, which was a Barclays Bank actually, so a UK bank. And they told me, well, sorry, but because our branch is located on Cyprus, you just can't touch your money until we give you access again, and we don't know if you're ever going to get access to it again, or maybe you're going to get a haircut, maybe you're going to lose part of it. And I was like, how is that possible? I mean, I set up a bank account there. I pay quite a lot of money actually for a corporate bank account there to keep it up. Had a lot of money on there as well. And all of a sudden, a bank tells me I can't touch it. And I started researching, how does banking work? How does money work? And I started to realize actually that money itself, if you put it in a bank account, it's actually not your money. You don't own it anymore. And that sort of made me kind of scared, because all my money was in bank accounts basically. And I started looking at alternatives. I started looking at solutions to solve this problem. And fairly quickly I found Bitcoin. I was reading about Bitcoin as a solution as a libertarian solution to the financial system. And at first I didn't really believe in it. I felt like, this is not really my world. I'm a corporate guy. I'm a capitalist. I'm an entrepreneur. I'm not a libertarian. But then after reading more about it, I realized these guys actually have something here. I mean, why would my money actually be owned by other people? I make my money, and I should be able to keep it myself and keep it safe. And why do I allow central banks to keep inflating my money? Why do they keep on printing money and basically making my money worth less? And so I found Bitcoin, and I started looking into Bitcoin, and I realized, wow, actually this could be a solution for the whole financial system, because the system itself is, well, rotten, I would say. It's sick. It doesn't function well anymore. Something will have to change eventually, and most people just don't see it yet. They don't know any better, so they think this is the best solution out there. But I realized 4.5 years ago that actually, something will have to change eventually, and I didn't know how long it would take. I thought maybe it's 2-3 years, maybe it's 10 years. But I realized there will be something else, and the next big thing at that point I suddenly realized was probably going to be something like blockchain and Bitcoin. So I found Bitcoin, started reading up about it, and realized, oh wow, this is actually a big thing. The Bitcoin and the underlying blockchain, this will change the world. So really, because my bank account in Cyprus got blocked, I found Bitcoin, and I realized that the financial world actually is very different from what I always thought it was going to be.
And so now what are you doing with your time? Are you traveling around the world speaking at conferences? You're an advocate. You're a Bitcoin maximalist.
Yeah, I'm a Bitcoin maximalist. That means I'm a true believer in Bitcoin itself. And I think that, there's going to be a lot of other altcoins out there, but in the end, the big one is always going to be Bitcoin. So yeah, I do own a few Ethereums, I own some other altcoins, but in the end, most of my crypto holdings are in Bitcoin. I really believe in this. And over the past years, I've done a lot actually in the Bitcoin space. I've traveled around the world, talked to a lot of people about Bitcoin. I've written a lot of articles about Bitcoin, spoken at conferences, in radio shows and TV shows about, where is the Bitcoin world going and what is Bitcoin? How will it change the world? And by doing this, by evangelizing it, basically, it made me believe in Bitcoin even stronger. It's really something I'm extremely passionate about and something I really like to do. And the fact that we're now doing the FirstBlock Capital Bitcoin investment trust is something I've wanted to do this for years, and I'm more passionate about it than ever. I've done a few other startups in the past, very successful ones actually, but this one is actually the one I'm most passionate about. I really feel it's more than making money. It's really about changing the world, teaching people about the future and being part of this, being part of Bitcoin in the early stages, because it's still very, very early in the Bitcoin world.
I agree. It's very early in the Bitcoin world. I see that this whole digital currency asset class is going to go to 500 billion to trillions of dollars. And we really are in the nascent stage of an emerging technology that's going to change the world. And we actually haven't seen how it's going to change the world, but we're positioning ourselves in FirstBlock Capital and as the on-ramp for retail and institutional investors to get access to cryptocurrency. So we believe that we're actually accelerating the entire asset class and the entire ecosystem by bringing money in on the sidelines into this space, and it's truly exciting.
So I'm a Bitcoin maximalist, and that means I would invest most of my money in Bitcoin. Suppose you would have $1 million today. What would you invest it in?
Yeah, $1 million today. I would invest 800 grand in Bitcoin and 200 grand in ICOs.
So you're a Bitcoin maximalist as well.
Yeah.
Actually. Yeah.
Slash 800 grand in Bitcoin, 100 grand in Ethereum, 100 grand in ICOs. Ethereum's not going anywhere because of the smart contract feature.
Yeah, true.
The smart contract feature is truly unique. Like it really is. It still has its bumps, but I think it serves a real purpose. And you're not going to put the smart contract feature on the Bitcoin blockchain anytime soon. So I'm actually excited to see other blockchains come up that people haven't even thought of yet, that are in development now, that have different instrumentations and different protocols and different use cases that we're going to use to solve business problems. Like the most exciting thing for me is to see the disintermediation. All of these middlemen that are just pushing paper back and forth, that's all going to become irrelevant. So it's going to free up so much time for humanity to do creative things. It's free up time for people to do other stuff. But when you see a change from agriculture to urbanization, when people were farming and now no more farming, what are we going to do? Now we're all in these office buildings typing on computers. And now when the blockchain is going to do all of this stuff, what are people going to do? So the real evolution of humanity, if you take a step back, go 10,000 feet, this is a very logical progression in the internet evolving, and from the internet of information to the internet of value, and how that's going to change the economy. To me, it's just very obvious. And we're just seeing it right now and positioning ourselves to be able to take advantage of that and to help push it forward, really.
Yeah. So we've been traveling the world for the past 4 weeks, selling the Bitcoin Trust to people all over the world. Were there any things that you learned during this trip about Bitcoin or about things related to Bitcoin?
Yeah, it's not easy to understand. That's what I've learned. It's not an easy concept, and there's confusion in the market because Bitcoin and blockchain there's never been a real association in the media between the two. Bitcoin was invented in 2009, and in 2013 it literally crashed, and it got all of these horrible associations of Mt. Gox, Bitcoin hacked, Silk Road, used for money laundering, illicit purposes, Bitcoin. So Bitcoin was in its adolescence, and it did all these things allegedly that gave it this negative stigma in the media, because the media didn't understand it. They just like to actually create these negative associations. So let's go through them one by one. Mt. Gox, $300 million worth of Bitcoin stolen, hacked off of an exchange. Well, Bitcoin did exactly what it was supposed to do. Remember, there's a private key which represents your Bitcoin. So this exchange actually had the private keys on the actual website itself. So somebody just hacked into the website and there was a list of all the private keys / like cash lying on the street. He took all those private keys and he sent them to himself to his own wallet. Bitcoin did exactly what it was supposed to do. Whoever owns the private key sends it to a public key address. That transaction shoots out into the blockchain. In the next block, it gets timestamped and then locked in the blockchain. Bitcoin did exactly what it was supposed to do. Bitcoin has never been hacked. In fact, that guy just got caught last year. So they were able to track. Forensic blockchain accounting was able to track all of those wallets that he was putting them through. So Bitcoin is a horrible, horrible money laundering tool. So Silk Road association with Bitcoin, all of the WannaCry hackers wanting Bitcoin, these are not smart people. Bitcoin is a horrible money laundering tool. You're going to get caught. There are better altcoins out there. So to me, what I learned is it's hard to explain what Bitcoin is on its own. And if you actually have to create the association of Bitcoin and blockchain, it's an even longer conversation. So what we want to do is make Bitcoin associated with blockchain and take out the negative aspects, the Jamie Dimon comments of a bubble, a tulip bubble, the Silk Road comments of it's used for money laundering. Those are all just incorrect. And the more that we talk to even people, intelligent people, they don't understand that and they're swayed by the media, right?
I agree. I mean, what my biggest lesson was really is I was really surprised that there's such a small number of people that really understand anything about Bitcoin at this point. It's such a small number of people that have any exposure to Bitcoin. I thought actually, because I think I've been living in a bit of an echo chamber for the past years. Talking to a lot of people among my friends and my family that actually do know a lot about Bitcoin. But, of course, I talk to other people as well that don't know too much about it. But I sort of assumed that people in the financial world at least had a basic understanding of Bitcoin. And this is not the case. I mean, we talked to so many investment advisors, to family offices, to high net worth individuals, guys that made billions that still don't even know what Bitcoin is. They don't own a Bitcoin yet. And that made me even more bullish about it. I realized that, we really are one of the very early people in this space, the pioneers, trying to sell this product and trying to educate people about it. And that made me even more bullish about the fact that, Bitcoin is still very cheap. Yeah, maybe $5,000-$6,000 sounds expensive. But, if it's going to be $500,000-$600,000 a few years from now, people were like, wow, I wish I had bought into this product, in 2017. And I'm more bullish actually than I've ever been on Bitcoin at this stage. It's still very volatile, but I know it's not going to go down to zero anymore. That risk is really gone. I mean, there's still a small chance always that something will happen, something big, but it's it's almost zero, the risk that will happen. But in the end, the upside is so much bigger, and it's to me, it's almost a given that's going to go to $100,000 or more. And, so for me, it's like what I learned, my takeaway from this trip was really, because there's such a small number of people involved in Bitcoin and only a small number of people that own any Bitcoin, the sky is really the limit.
Well, the thing is, it's going to go up not because we think or feel that it is. It's because the blockchain is going to be used. It's going to become more ubiquitous. It's actually proven that to create transparency, to reduce costs, as more businesses adopt blockchain technology, cryptocurrency will rise because it's the fuel for the blockchain. It's the fuel for the engine. So that's the thing. It's not like we hope it's going to go up. No, it is so clear and so obvious. Just like the internet at the beginning was going to change the world, and it has completely. The blockchain is about to do the exact same things. We're at the beginning stages of an emergent technology that is totally disruptive, that is going to change business and the economy, and people still don't get it. So we need a user interface inflection point, like before the Netscape came and created accessibility to web pages as opposed to writing MS-DOS, and we're still in the MS-DOS stages of blockchain, right? We need a user interface inflection point which simplifies everything. So we're doing all this before that major UX inflection point, and that's why it's a little bit harder. So now we're speaking to people, and they just what's the value? I don't get it. I don't understand it. And so we're really getting pushed up against these paradigms and these thoughts of like, it's digital. I don't get it. I can't touch it. I can't feel it. I can't hold it. You know, it and you talk to millennials or young kids and they're like, yeah, I get it. So, you know, naturally speaking, there's going to be an evolutionary shift as, you know, the older generation passes away and the newer one comes, and with the older generation goes all of their predispositions and all of their paradigms, the new ones come up. But we want to push it faster, right? And I think that if the story is told in a right way, then you can bring people on board. When we're talking to these high net worth guys, after we spend an hour with them explaining, all of them at the end want to invest because they're like, you know, I didn't get that in the sound clip on my Facebook news feed about Bitcoin, but sitting with us talking.
And that's because they're entrepreneurial. I think that makes a big difference. They see the opportunity. They're willing to. They've seen success, so they know that things can be successful. I think if you talk to professional investors that manage money for other people, for them it's often harder to see the upside. They're more risk averse. They are more like, yeah, but I read all these negative things about it and I don't really believe in it. They're looking at it from a different perspective. The entrepreneurs, the high net worth individuals, the guys who made their millions and billions themselves, they know that you can make money and tons of money of being early in something and seeing it before other people see it. Investment advisors have a harder time seeing it. For them, it's more about what are the risks for me. They're not really seeing it from the perspective of their clients, so their clients can make 10 or 100 times their money, but more like, okay, what happens if it goes down 20-30%? Then I'm on the hook.
Mm-hmm. Yeah, so it's all about education, right? Yep. And the message that we're bringing to the world is that Bitcoin is the future, blockchain is the future, and we have a fund that will allow you to essentially buy shares in the equivalent of the internet. So in 1992, if someone came to you and said, you can buy shares in the internet, would you do it? The answer is absolutely yes. And so that's the opportunity that we're bringing people right now, being able to invest directly in Bitcoin through owning units of our trust. They're essentially investing in the protocol. They're investing in the future of blockchain. So it's truly a unique opportunity. And so people are getting that, and that's why our fund is growing. But it takes a lot of convincing in some cases.
Yeah, that's why I do the podcast, helping people to understand what Bitcoin is or blockchain is. Indeed, what you just said, it's the older people that don't really want to get it, or they don't get it, but it's also because they don't want to get it. They don't want to see change anymore. They feel like the world is good for them. And the younger generation is like, wow, this is a big opportunity. It can change the world in a positive way. They're willing to see change. And that's quite amazing, actually. That's the difference between, the older generation and the younger ones, that they really, look at the world in a very different way. And, for me, it's inevitable, given that the younger generation gets older and, they don't have money yet, but they will get money eventually. They will use the blockchain. They will use Bitcoin. And, Bitcoin will replace gold, in my opinion, and not just 10%, but maybe 30, 40, 50% eventually. And, that leads to Bitcoin prices of, hundreds of thousands of dollars. It's going to happen. It's going to take a bit of time, a few years maybe, but not 10 years. And, it's another reason why I'm extremely bullish after this trip all over the world, talking to all these people everywhere and realizing it's people all want to make money, and they're all willing to listen eventually if you sit down with them. And they all believe that the world, needs change, and Bitcoin could give that change.
So the most interesting blockchain project that I've seen being worked on right now is land titles are being put onto the blockchain. So this is a software as a service that's going to be offered to governments, so that governments can actually use this software and basically it's replace their central database of land registry and put it onto the blockchain through this software in a very easy way. So the Dutch government is looking at it. It's already rolled out in Georgia. 300,000 land titles out of 5 million are currently on this. And Kazakhstan also is looking to implement this. And why it's interesting is that Bitcoin and blockchain is global. So the countries that are adopting the technology will be the ones, not the US, not the UK, not Japan, maybe Japan, but it's countries that are still in a different stage of growth. So the reason why Kazakhstan is looking at adopting blockchain technology for land title certificates is because the people of Kazakhstan don't trust the government. And the new regime in Kazakhstan really want to win over the trust of the people. So they're being transparent and they're adopting blockchain technology and saying, hey, look, we're putting all the land titles on the blockchain. So even if we do change the regime, historically what would happen is a new regime would come in and there's a coup, and then they would go right to the central database of land registry, change the name and say, hey, you don't own that piece of land. Actually, my buddy does. Says right here in the land registry, sorry about your luck. Now, that's gone because it's in the blockchain and it's immutable. Think about how much corruption that's stopping, right? And that's just one example. To me, that is the hugest opportunity, right? That and then providing access to cryptocurrency for people that don't have a bank account. Like the blockchain it's not just about making money with Bitcoin. It's about adopting blockchain technology, which is going to change the economy, which is going to allow more people to participate in the global economy by giving them access to having funds and in buying things that otherwise you would need a credit card and a bank account. The global economy is going to grow even more with blockchain and cryptocurrency. That to me is the truly exciting thing about this whole.
Yeah, so for the land titles, for example, I think an important part that people may not see at this point is that by putting land titles on the blockchain, by giving people that didn't have access to land titles before, that owned land but didn't have a land title for it, it gives them access to the financial system. Because if someone wants to set up a business and they need to borrow some money from a bank or from someone else, they need to be able to mortgage, for example, their land for this. And if you don't have a land title, you cannot do it. By having these land titles on the blockchain, it creates a whole new economy. It creates a new circle of people that are able to get access to capital, start companies, and grow a whole economy. And I think doing this, using the blockchain for land titles is more than just making things more efficient. It actually generates a whole new economy for people that didn't have access to capital before. And that's something that was actually discussed at Richard Branson's Island a few years ago when we were there. This actually, in both in Peru and in Egypt, this was used using putting land tiles on a blockchain as a project that worked amazingly. It really gave people the power to start businesses. They couldn't do it before, and now suddenly they can do it. And that's the power of the blockchain. That's the power of cryptocurrencies and how it's changing the developing countries. Because really the change, I think, is coming, first and foremost from developing countries, non-developed countries, and eventually it will go to the Western world. I mean, the US and Canada don't have a real need, no real perceived need at least, for Bitcoin and blockchain. Eventually they realize that they need it, but the real change will come from Africa, from the Middle East, from Eastern Europe. Those are the countries, I think, where the real change is happening. And those will be the leaders in the space.
Yeah. The disruption is not going to come from a Silicon Valley. It's going to come from the economically developing parts of the world that actually utilize this to change an otherwise broken system. And that to me is the true opportunity of blockchain. It's going to actually increase the standard of living so many people so quickly, and it's going to do it quickly.
And that's why it's so great we're doing this. That makes me really passionate about what we're doing. It's not about making money. It's about changing the world in a positive way.
Mm-hmm. The interesting thing about Bitcoin is that there's a limited supply, and there's a really unique way on how new Bitcoin is created. So there only will ever be 21 million Bitcoin ever in circulation, and there are currently 16.5 million Bitcoins in existence. And Bitcoins are created through the mining process. And the mining process is very interesting. It's essentially servers that secure the distributed ledger, where servers actually validate transactions every 10 minutes. And every 10 minutes, all of the Bitcoin transactions that occur within the 10 minutes shoot up to what's called the mempool or the memory pool. And all of the mining servers around the world now compete to basically hash a block or to validate the block, so that if they timestamp all the transactions within that block, they earn a reward. And then, like an organism with a beating heart, every 10 minutes the blockchain breathes and a block is set. And that block is now immutable and forever in perpetuity for everyone to see. Mark, did you want to go into a little bit more detail on the mining process?
Sure. So the way it works is actually that's indeed the miners, they take the transactions out of the mempool and they put them together in the ledger, and all these transactions together, they form a block. The moment they form the block, what they do is then they take a random number and they put the random number together with all the transactions in the block, and the combination of all these things together, they make a hash out of it, and the hash is basically the answer to the resulting hash. If it starts with a number of zeros, certain number of zeros, then that transaction is the winning transaction. So for example, if the hash should start with 17 zeros, the first miner that puts a ledger together and then combines it with a random number and hashes it to a result with 17 zeros is the one that wins the Bitcoin reward. That's the one basically that's whose block is going to be included in the blockchain. It still has to be verified by at least 50% of all the miners. So when half of all the miners say, okay, this is correct, the hash plus that number that you have created leads to this 17-0 number, then they get the block reward, which is about 12.5 Bitcoin at this point. And this mining reward is how new Bitcoins are created. And the interesting thing is this mining reward goes down every 3-4 years. So right now it's 12.5 Bitcoin. It will go down to 6.25 Bitcoins in about 2 years from now. And then 3-4 years later it goes down to, and it's going to halve again, and it keeps on halving every 4 years. So eventually Bitcoin will reach about 21 million Bitcoins. It will never really reach 21 million Bitcoins. And so the new coins are generated by the miners. Now, of course, the problem is that when the mining reward goes down to, say, 0.1 Bitcoin eventually in 100 years from now, miners, cannot profitably mine anymore. Potentially, if Bitcoin is worth millions of dollars, it could still be profitable. But actually, what's going to happen is miners are going to be paid by transaction fees. That happens now already. But if there's going to be a lot of transactions, the number of transactions that generate fees will actually go up a lot. And that's also why it's important that Bitcoin will scale a little bit, because we want to see transactions where people get paid transaction fees. So really, miners put the ledger together, put the blocks together. They get rewarded by Bitcoin rewards and by transaction fees, and that's really what's backing Bitcoin itself. That's what makes Bitcoin strong. And there's right now tens of billions of value in servers, actually it's hundreds of billions of value in servers that back the Bitcoin blockchain that generate these rewards. And the way it works is also that if the Bitcoin price goes up, more people enter the mining market because it's more profitable to mine, because those 12.5 Bitcoins are worth more money. And what happens then is if more people enter this race to mine and to be the first one to get this result, with in this case 17 zeros, if more people do that, it will go. The time to get this result is going to be less than 10 minutes. So the average time should be 10 minutes for a block. But if more people enter this, of course it will likely be faster than 10 minutes. And if for example the average time goes down to 9 or 8 minutes, Bitcoin actually will make its algorithm more difficult to get this end result. And so by making it more difficult, if more people come in, they still in the end will have they will need about 10 minutes to get this result. So mining is really a process that's dynamic. The more people get in, the harder it gets to mine Bitcoin. And if miners leave, it will get easier to mine the Bitcoins. And so if the price goes up, more miners come in, it will be harder to mine. Price goes down, miners leave, and it will be easier to mine.
So that's the value of the blockchain, and the value of a Bitcoin is in the mining infrastructure that supports the timestamping of Bitcoin transactions. That's an important association to make. So another thing is, how does Bitcoin compare to stocks? Well, again, stocks represent ownership in companies, and companies go up and down in value, and the stocks that represent shares in those companies are traded on a secondary market. Bitcoin, again, is a protocol. It's actually an investment in the blockchain. So when you're buying Bitcoin, you're actually purchasing the protocol of the Bitcoin blockchain. So there's a fundamental difference, because it's not like you're buying Facebook or Google or Amazon. What you're buying is the internet itself. So there's a fundamental difference on buying Bitcoin versus buying stock, because when you buy Bitcoin, you're buying the technology itself. And the technology is something that's going to change the world, much like the internet did. So there's a fundamental difference. You can view it as buying a currency and trading in and out of a currency, but that's not the way that we see it. We see it as a long-term investment. We see it as an investment in the protocol itself, an investment in the internet, an investment in blockchain. And the invention of the blockchain is, again, it's made the internet evolve from the internet of value, from the internet of information to the internet of value. And that change is going to basically affect the economy and business in ways that we don't yet comprehend. So you can't bet against blockchain because the cat's out of the bag. Everyone knows that this technology is going to actually reduce transaction costs, increase transparency, increase efficiency. So the world is going that way already. And now an opportunity to purchase Bitcoin is an opportunity to take a stake in the future earnings of the uplift of that entire ecosystem.
Yeah, so one other big difference between stocks and cryptocurrencies is that stocks are traded on exchanges that only open up between 9 in the morning and 4 p.m. Bitcoin trades 24/7. At any time of the day, you can sell Bitcoin or buy Bitcoin and automatically get your fiat currency or get something else. I mean, stocks only trade against a fiat currency. Bitcoin actually trades against fiat currency like US dollars or Canadian dollars, but also against other cryptocurrencies like Ethereum, like Zcash, like Ripple, like Monero. So you can get, you cannot just get Bitcoin. Sorry. So you cannot just get US dollars or Canadian dollars. But you can get any other cryptocurrency that you would like to get as well. That's a big difference. Next to that, of course, Bitcoin is purely digital. There are no stock certificates. There are no paper trails. It's all on the blockchain. That's the trail that's there. The blockchain can prove that you own certain Bitcoins and that you bought them. But there's no paper that you can show off and say, okay, this is a stock certificate I earned, so this is a Bitcoin certificate I earned. It's all digital, and it will never be on paper.
So is there longevity in this technology, in Bitcoin and the blockchain? Well, we believe that blockchain and Bitcoin is the next inflection point in the digital age. Quite simply, you have personal computing in the late 80s. Then you have the internet as we know it in the 90s, in the early 2000s. And now you have blockchain. So these are inflection points in the digital age, which have created tremendous value and a creative value to the entire financial markets. So the longevity in blockchain is undeniable. There is zero doubt that this technology will be around forever and help the world change. So at least that's the way that I see it.
Yeah, I mean, for a long time not for a long time, but a few years ago, I was really worried about governments trying to ban Bitcoin. I think that risk has really gone away. Governments are trying to regulate it simply because they know they cannot really ban Bitcoin. Because if I want to send someone a Bitcoin, I can do that without touching the system. Nobody knows actually where I've sent someone Bitcoin. You can see it on the blockchain, but there's no link to the financial system as we know it. That's one thing. The other thing is actually that if you ban Bitcoin, you actually ban the blockchain. You ban the most important blockchain in the world. And banning the blockchain, governments realize nowadays it's something they don't want to do. It's like closing down the internet. There's a lot of economic opportunities that will be lost if you try to ban Bitcoin and if you don't have the blockchain anymore. So in the long run, I think they realize the benefits of Bitcoin are actually much bigger than the downsides of Bitcoin. So governments start to embrace Bitcoin. And what you're seeing, for example, is that countries like Japan, for example, allow Bitcoin as a legal tender nowadays. So it's really something you can use to pay officially with in Japan. And that's a major thing. I mean, that's something I wouldn't have expected a few years ago. This happened on May 1 this year. May 1, 2017, Japan actually allowed Bitcoin as a sort of a currency. And I think it's the beginning of something much bigger. I think more countries will do this. And even if some country would say, okay, we're going to ban Bitcoin, in the end, if there's one other country in the world that allows it, you can go there and change to, in this case, Japanese yen, for example, and then change the Japanese yen to US dollars, and you still get back to fiat currency. So the cat's out of the bag. It won't go back in again. And Bitcoin's here to stay.
So what about countries like China, who now have banned ICOs and banned exchanges? What are they trying to do? I don't think that they're actually trying to stop blockchain technology.
No, I mean China is really an exception in the sense that, they're really trying to control what's happening in the crypto space. They realized that things were getting out of hand. They were getting too big. The exchanges were very powerful. For a while, actually, until about a year ago, the Chinese exchanges had about 85 to 90% of the world markets in their hands. So all the transactions, 80% of the transactions in the world were taking place on Chinese exchanges. Then what happened is China actually told exchanges they were not allowed to do zero fee trades anymore, so they had to charge a transaction fee. And, that led to the fact that China suddenly only had 15% of all the trades in the world. So it went down from 90% to 15%. But apparently that was not enough for the Chinese government, because a lot of Chinese were still actually changing their renminbi to Bitcoin, and then later on changing the Bitcoin to US dollars or other currencies. So there was a capital flight going on, and they felt they couldn't control it. So what they did is they didn't ban the exchanges itself, but they told the exchanges that they couldn't do any fiat trades anymore. So once you had Bitcoin on an exchange, that's fine. You can buy Ethereum or other cryptocurrencies. You just cannot get renminbi back anymore. And if you have renminbi, you cannot go to an exchange to buy Bitcoin. They are also banning ICOs simply because ICOs were too much of a hype. They had crazy returns for investors. They raised so much money. It just they just felt like this is not normal. This is dangerous. This could lead to market disruptions. China wants to control things, so as they usually do in these cases, they just totally ban ICOs from one moment on, and then eventually they start again. So it's a temporary thing, in my opinion.
Yeah. So what's trending and what's up and coming? Maybe we can talk about the fork that's happening, the Bitcoin Cash fork that happened in the summer, and now there's the Bitcoin Gold or the SegWit fork that's coming up here shortly. I think from what I've seen is that it's only made Bitcoin stronger, because these are derivatives of the Bitcoin blockchain, and at the end of the day, they've created just additional altcoins. But the fact is that they're leveraging the network effects of the Bitcoin blockchain and then splitting off and becoming fairly significant altcoins, but at the end of the day, with different either bigger block sizes or just different functionality. But I think ultimately these forks will only make the original Bitcoin much stronger, right? And maybe the shortcomings of the Bitcoin blockchain, where slow transaction times, low transactions volume, these are all actually going to be addressed, aren't they?
Yeah, they're not necessarily bad, actually, to be honest. I mean, slow transaction times also means it's more secure. I mean, you have 10 minutes to basically get transactions in. It's not necessarily a bad thing, I think. Mm-hmm. There are other blockchains. If you want to get faster transactions, you go to another blockchain. But in the end, even if you use another blockchain, if you wait 10 minutes, only after 10 minutes you have the same security as Bitcoin has, or normally even less than this. So to get back to hard forks, I think a hard fork is really a split in the network. What happened is someone wants an additional feature in Bitcoin. For example, Bitcoin has a 1 megabyte limit on blocks. Bitcoin Cash wanted to change this and wanted to increase the block size to 2 megabyte or even bigger, and they did so. And then what happens is the miners need to make a decision on whether they want to follow the original Bitcoin or whether they want to follow the new Bitcoin, the Bitcoin Cash it was called. And what you saw there is that a majority of the miners chose for the original Bitcoin, and a small percentage chose for Bitcoin Cash. So Bitcoin Cash was didn't go away. It's still there. It still trades on right now about $400 per coin. But it's not a real success, I would say. It's an altcoin. It's a new currency, and in the next couple of weeks there will be 2 more hard forks, actually, both related to the block size, to the size of the Bitcoin blockchain, both forks of the original Bitcoin. And nobody really knows what will happen, but I'm not too worried about it. I think Bitcoin has shown it's very resilient. I don't think Bitcoin will go away even after a successful hard fork. Mm-hmm. I think Bitcoin is here to stay, and that's also if you look at the past 2 weeks, Bitcoin price went up a lot, and that's partly because people see a hard fork nowadays as free cash, because the moment a hard fork occurs and the second currency is created, every person who holds Bitcoin at that point in time gets a free coin in the other blockchain. So if you hold one Bitcoin in the old blockchain, you get one additional Bitcoin in the new blockchain. You can just sell it afterwards. And I think there's something happening in the market right now that people want to hold Bitcoin so they can get the additional coins the moment the hard fork happens. So I'm not worried about it. It will have volatility effects on the market, but Bitcoin is resilient and won't go away. Prices may be very volatile for a few days or a few weeks, but once it's clear that the hard fork didn't work, I think we'll see a huge surge in prices.
Yeah. And then, so we create access to owning Bitcoin through a titled auditable financial security called the FBC Bitcoin Trust, but you can also actually go and buy Bitcoin at an ATM. The issue with ATMs is it's a very low transaction amount, right? They're very low dollar amounts. And for our trust, the answer is for large allocators to take major positions, $100,000, $1 million, $10 million. That's really what the trust is designed to do, is to actually give scalable access and safe, secured access to owning Bitcoin without having to do it yourselves. But there is some validity in ATMs, and I think that that's going to help basically continue the discussion. And as more ATMs get rolled out, more people will ask, oh, what's Bitcoin? Oh, that's interesting. More ATMs, it must be becoming more mainstream, which is just going to help the conversation at the end of the day. I think that's what's happening with the ATMs.
Yeah, I mean, when I got into Bitcoin in 2013, ATMs just started, and I thought they would grow much faster than they did. I think one reason why they didn't is because Bitcoin went up so much, people didn't use it as a currency. They realized if I spend it right now, actually it's an opportunity cost, because if I don't spend the money right now, it may be worth double the money 1 or 2 months from now. Something that happened to me as well. I mean, I spent probably hundreds of thousands of dollars on coffees and taxis back in 2013, looking at current prices. And when you see that and when you realize is you stop spending it. And I did use ATMs as well in the very beginning and stopped using them. I don't see a lot of people using them right now, but I think it could actually change in the near future, especially when people realize if you buy things with Bitcoin, and the moment you buy something, you just buy it back basically. You spend $100 in Bitcoin, then go back to the ATM and buy another $100 at similar prices. I think that's something that may happen.
Yeah. So is Bitcoin a safe investment? Well, there's no doubt the volatility of Bitcoin, but like any new asset class, the volatility exists as speculators come in and out of the market and drive the price up or down, because the market cap of Bitcoin, $70 to $80 billion, it's still a very young asset. And so I think it's natural to see that. But again, with the FBC Bitcoin Trust, we're long Bitcoin, right? And we want long-term holders that have a long-term view and that are going to ride out the waves, because at the end of the day, the trend is upwards. There's no denying it. So when a comment like Jamie Dimon comes out or China makes a ruling, there's been dips, even up to 10 to 20% in a day, but ultimately it comes back and it surges back. So the actual trajectory has always been up. So whether or not it's a safe investment itself is, we're not saying put your entire portfolio into Bitcoin. What we're preaching into family offices and to high net worths is to put 1% to 5% of your AUM into the fund or into crypto, because that way you're hedging your entire portfolio, you're diversifying your portfolio. If there's a correction in the equity market, then at the end of the day, your crypto holdings will become more meaningful and will help hedge against the loss. Really, we're creating a financial product that gives you a lever, another non-correlated asset, and we're giving you exposure to that. And that's really what the FBC Bitcoin Trust is all about.
Yeah, I agree. Yeah.
So how does FirstBlock work? Well, FirstBlock is an asset manager with its EMD and IFM license. It's the first regulated crypto investment firm in Canada. And so how it works is that we create financial products that give investors exposure to the cryptocurrency community and ecosystem without having to actually purchase coins. So how it works is that we will be launching a fleet of investable products. And our first product is the FBC Bitcoin Trust, where you give us money, we buy Bitcoin on your behalf and keep it safe. We charge a 1.5% management fee. And at the end of the day, you don't have the headache of having to figure out how to buy Bitcoin, how to pay for it, and how to keep it safe. We purchase it for you. We give you reporting and monitoring, and then we keep it safe in an underground vault with our partners at Zappo, who are the Fort Knox of Bitcoin. And what are some of the problems? Well, most people come to us with the problem. How do I buy Bitcoin? Right? That's why we created FirstBlock Capital. That's why we've created the FBC Bitcoin Trust. The problem is I see this Bitcoin going up. How do I buy it? I have no idea. You have to go to an exchange. You have to KYC AML, send sensitive documents over the internet to some random company that's not regulated. You have to populate your fiat, your trading account with fiat currency, which means you have to wire transfer money to Poland or Malaysia. Then when you actually do transact and buy Bitcoin on the trading account, then you have to take that private key off of the exchange, keep it in your wallet, or keep it in cold storage. The problem is that's complicated. The problem is that my father will never figure out how to do that and doesn't want to. So the problem that we're solving for with FirstBlock Capital and the FBC Bitcoin Trust is that you purchase it like any other fixed income product or equity. You put it into your brokerage account. It shows up as a portfolio holding under crypto, and you just sit and you watch it go up. That's really the problem that we're solving for.
Yeah, we're the only real solution for people who want to buy more than, say, $25,000 worth of Bitcoin and want to get it right away. Mm-hmm. There's just no other way to get it at the moment. It's if you don't have an account, if you don't have an exchange account, if you don't have a wallet, you're not able to get to this money. And if you want it quickly, there's just no way of doing it. It takes several weeks at least just to set up an account at an exchange. For us, you come to us, we set up your account, we buy Bitcoin for you. It's a very fast process. So, it's the only solution out there at this moment for people that want to have access to Bitcoin at the real Bitcoin price, so without paying a huge premium. And I think that's the biggest problem we're solving right now.
So what makes us credible? Well, both Mark and I are technology entrepreneurs. I myself founded Shumi.ca in 2012, sold that business after 2 years for $15 million, stayed on with a larger group, grew that to $300 million. But at the end of the day, I knew that retail was not for me, and I wanted to find something that would change the world. And I was lucky enough at the beginning of 2017 to find blockchain. Blockchain, to me, was clearly the next inflection point in the digital age. It is a technology that will change the world. It re-sparked my entrepreneurial spirit. I've become basically enamored with changing the world by evangelizing blockchain and educating people about the benefits of Bitcoin and blockchain, and positioning our company, FirstBlock Capital, in various companies that are going to be accelerating the ecosystem. And we're bringing in retail and institutional money from the sidelines into the digital currency asset class, which will further accelerate the entire the entire space. So the credibility on from my standpoint is that as a technology entrepreneur, I've committed my life now to educating people on Bitcoin and blockchain, and I could not be happier.
Yeah, from my side, my background, I've been an entrepreneur for many years. I started China's largest online video site back in 2004. We took it public on the Nasdaq back in 2011. Then merged with our main competitor and eventually sold it to Alibaba. It was $1 billion company when we listed it, and multi-billion-dollar when Alibaba bought it. So it was a big success. And so I retired when I was 39 years old to West Vancouver, and then really found Bitcoin and became very active in the Bitcoin space. Spoke at conferences, wrote about Bitcoin. Spent literally hours per day for the past 4.5 years, just reading about Bitcoin, listening to podcasts about Bitcoin, trying to understand the ecosystem, and networking with people in the space. So I think that's really where part of the credibility for this fund comes from. We really, Sean and I really are people who understand Bitcoin and blockchain. We're not financial guys who want to make a quick buck. We're building a real product here, something that's needed in the market, and that may not make us rich because there's only a small management fee involved. We only charge 1.5% management fee, to buy the Bitcoins on your behalf and to keep them safe for you. There's no carry like some hedge funds do. So it's a small fee, and it helps to keep your Bitcoin safe. That's the main thing we do in the fund. I think we discussed most of the things that people ask us in these sessions. It's all related to, not really understanding Bitcoin, trying to figure out, will governments ban it, for example? That's something people are worried about. People are worried about governments banning it. People are worried about, Bitcoin being a fraud. People, listen to the news. They hear someone like Jamie Dimon, the CEO of JP Morgan, saying that Bitcoin is a fraud and it's a bubble. those are the questions we get, and then we explain why actually it's not a bubble, that Bitcoin is actually a very great investment that will keep on growing in value. And then people get it. It's really about education. The questions we always get are related to just not really understanding how Bitcoin and blockchain work. And they're often the same questions, and that's part of the reason why we're doing this podcast here right now. I think most of the questions that people ask are were covered in this podcast here, and I hope it will help people to understand the space better.
Yeah, from my standpoint, a lot of the questions come up are, will governments ban it? What is the actual value behind a Bitcoin? And, why is there a limited supply? And, when is it going to crash? Right. So again, that speaks to the lack of understanding of, again, the association between Bitcoin and blockchain. It's an important association that we're now trying to bring to market, to put into the consciousness of the masses, that you cannot have blockchain without Bitcoin. You can have many other blockchains, and there will be many other cryptocurrencies, but the Bitcoin blockchain has network effects. It's the largest, it's the most secure. Whenever you are going to put any type of asset onto a blockchain, you will anchor it on the Bitcoin blockchain for security reasons. Yeah. And that's why the value of Bitcoin is always going to continue to rise, because of the security aspect of it, because of the hashing power, or the computers that are supporting the network, or the distributed ledger, timestamping transactions and settling blocks, because that will only get stronger and stronger as Bitcoin gets more widely adopted.
Yeah, and another question actually that I just think of is, it's mainly older guys actually asking this. It's about, who is behind Bitcoin, which central organization runs it. People don't seem to understand that, you don't need a central organization. People are brainwashed by governments to think that you need a government or a central bank to have a safe economy. It's actually totally not the case. I think it's a decentralized economy run by majority votes actually can be much better and more efficient and, more valuable for people than a central one where people, actually where the banks are big frauds, where governments keep on printing money and basically, inflating the value of the currencies that are behind it. So, Bitcoin is decentralized. There's nobody behind it. Nobody makes decisions on behalf of Bitcoin. There's no central bank. There will never be a central bank. It's a mathematical algorithm that determines everything in the Bitcoin world. And that's something that people seem to have difficulty to wrap their heads around. It's something people have never seen before. And people literally, like I said, they were brainwashed into believing that only a central authority can make decisions for people. But that's actually not the case. And that's hard for many people to understand. Yeah, so Bitcoin has the potential to completely disrupt the current financial system, and I think it's going to happen eventually. I think what's happening right now in the financial markets, people are being fooled by central banks. Since I was born, the US dollar went down about 70% in value. It's crazy. I mean, if you kept your money in cash, since in the past 45 years, you have 30% left what you had, 45 years ago. That's just crazy. People don't want to see it. People seem to think that the government is doing the best for them, but no, they're not. They do their best for sure, but in the end, there are better systems out there. It doesn't make sense to keep on printing money. It doesn't make sense to have central authorities deciding things for people. I think people are smart enough to make their own decisions. People are smart enough to care of their own money, and they've always done this. It's only something from the last few hundred years where people suddenly had, central authorities that took care of them and their money. I think we need to go back to people being their own bank account by having Bitcoin, by running their own Bitcoin software on their phones and their computers. It's far from where where we will be right now. There's no good software out there. The UI is not good enough. That's why we have the Bitcoin fund. But I think eventually, and if we're talking about 10, 15 years from now, I think for most people, they will transact in currencies, because I think the financial system will explode. I don't think it can survive in its current structure.
So I think for both Mark and I, it was a pleasure to do this podcast. I think any opportunity that we have to talk about FirstBlock Capital, to talk about the FBC Bitcoin Trust and how it creates an easy on-ramp for investors to get exposure to the price of Bitcoin without the risks of actually purchasing Bitcoin itself. Mark and I believe in the blockchain. We believe in Bitcoin. We're traveling around the world evangelizing the idea of Bitcoin and blockchain, and it's a long road, but it's one that I feel is worthwhile, because at the end of the day, the amount of disruption or the amount of accretive value to society that this technology will bring is something that I've committed my life to, and I couldn't be happier.
Yeah, I agree. I mean, I'm more passionate than ever about what I'm doing right now, and I think what we created here with the FBC Bitcoin Trust is something that will bring more money to people by bringing people to Bitcoin. And by owning some Bitcoin, you are more likely to start reading about Bitcoin, about cryptocurrencies, about blockchain, and about how it will change the world. And that's really why I like to do this. I wanna evangelize this and get people into the cryptocurrency world, and help them to eventually run their own money, run their own bank, basically. So I enjoy doing this, and so we're FirstBlock Capital. If you're interested in hearing more, come to our website, firstblock.capital. And if you have any questions, send us an email at info@firstblock.capital.
Thank you, everybody.
Thank you.